Today, we're talking about net assets. So net assets are unique to nonprofits. With for-profits, you have retained earnings and owner's equity, whereas with nonprofits, you have net assets. And this really tells us kind of what, in a general sense, what our obligations are for restrictions that have come in with contributions. So this stems from the fact that donors contributing to nonprofits can restrict the use of their donation to support either a specific purpose or for a specific period of time, or if it's a pledge, it's restricted until the funds are actually received. So here we'll discuss the various classes of net assets and primarily go over an example and look at how we're going to record at each step within our general ledger. So let's get started. So net assets without donor restrictions will generally include contributions that have no specified purpose, and there's no time restrictions, meaning either the donor has not specified a specific time when it can be used in the future, or it came in as actual cash or check instead of us waiting on funds from a pledge. Now, exchange transactions also generally will going to fall into net assets without donor restrictions. And this is because an exchange transaction is going to be commensurate value. We're not having any sort of donation with these exchange transactions. We're providing a service. So there might be times, and we'll discuss this in another video and another article, when you may bifurcate something, say like membership dues, into both an exchange transaction and a contribution. And generally that contribution is still likely to be unrestricted, but it is possible that somewhere within your membership agreement that there is a restriction placed on it. But for our purposes, we're just saying that exchange transactions for now are without donor restrictions because we're looking at pure exchange transaction. So net assets with donor restrictions would include contributions for which there's a specific time specified. Say we received a donation here during 2022 and the donor said this you can use in 2023. Well, it's going to be restricted until 2023. We can't use it. Or a donor sent in a pledge saying I'm going to give you $10,000. Well, we've received the pledge, so we're going to record the revenue, but it's restricted in the sense that we haven't received the funds yet. And once we receive those funds, move that on over to unrestricted. Now, there are temporary and permanent restrictions that you can have. Here we're going to be focusing on the temporary restrictions. In another video, we will talk about the permanent or perpetual restrictions because we can dedicate a whole other video to that and some other things such as board designated funds. So the best way, like I said, is to go through an example. So Mr. T is a contributor to the Leaf and Bean Conservatory. The conservatory is running a campaign to raise funds to purchase a new sprinkler system. So Mr. T donates $1,000 in response to the campaign and sends his donation noting that it's in response to the new sprinkler system campaign. So how would the Leaf and Bean Conservatory record this receipt? So how are they going to record it? Well, they are going to receive the cash. So we've got a debit to their checking account. And then they're also going to record the revenue, and they're going to record it as a donor restricted contribution. And for tracking purposes, we'd like to record it into a class that we create called New Sprinkler System, or we could call it Sprinkler System Campaign, something like that. And this will allow us to better track it for our net assets calculations, and just to know how much do we have available for this. We could also tag it and then just run a filter on that tag as well. But overall, I would prefer to create a class. Once we're done with this campaign, we can close that class out. So for simplicity's sake, let's say that the Leaf and Bean Observatory received a total of $10,000 in donations for the new sprinkler system, but they haven't incurred any expenses yet. How would we show this change in net assets? So far they've received $10,000, and during our normal transactions, you notice we are not hitting net assets. That's not part of a normal transaction. That's really generally part of our closing transactions. So we're going to do that either once a month, once a quarter, or maybe even just annually if we don't want to present it broken out on our monthly or quarterly financials. We definitely want to do it at least annually to show that we have the various classes of net assets. So what we can do is debit our net assets, because everything at first is going to flow through to net assets without donor restrictions. So we want to take it out of there by debiting it. And then we're going to credit net assets with donor restrictions. And we can even include a class, the new sprinkler system or sprinkler system campaign, to be able to show that within our classified balance sheet or statement of financial position. So continuing on, during the next period, the Leaf and Bean incurs costs of $6,500 related to the installation of the new system. This includes $5,500 for the system and $1,000 in labor so far. So the so far means they haven't actually finished it yet, so we're not going to start depreciation. They haven't put it into service. So how do we record these transactions? Well, that obviously is an improvement to the building, so we're going to record $6,500 debit to buildings and improvements, and we'll make a note in our description saying new sprinkler system and installation. And then of course that money is going to come out of our checking account, so we got a credit there. Now, one thing I didn't do is include a class here. Now, that's because once you release the funds, once you spend the funds that are for a specific purpose, they're released. And that means that it's now part of net assets without donor restrictions. So we could include a class here and then say the end of the quarter, end of the year, during our closing transactions, move it out if we want to include it in that class for ease of tracking. Obviously, if you don't want to include classes, another thing to do is include a schedule, and I prefer to keep a schedule along concurrently with doing these classes within the financials, because it gives you a way to double check things, and you can include more notes. So what about releases of restriction? I just kind of mentioned what a release is when there's a purpose. So use the funds for a specific purpose, those funds have been released. So the same thing with, say, a pledge. You receive the pledge, you receive the funds for that pledge, and the restriction for that time has been released. Or earlier, if we had received funds with the stipulation that we use it in 2023, then once 2023 hit, that would be released and would be part of our net assets without donor restrictions. So we could use it for whatever, as long as there wasn't a purpose also attached to it. For releases, I prefer to make these entries at the period close. If you get in the habit of making these on a daily or weekly basis, I think that honestly is too much. It's going to be confusing. You're going to have a lot of entries, and in that case, I think it's better to take a step back and say, let's just do this when we are preparing financial statements, whether that be monthly, quarterly, or annually. All right, so now obviously we know we're gonna do an entry at the close to show our release, and we're also going to show this in the statement of activities. So at the end of this, we didn't have any more contributions. So what we're going to do is we're going to debit our net assets with donor restrictions. And if we included a class, include that class, new sprinkler system, with a description. It's always nice to be able to go back and see why did we make an entry for $6,500. Then we're going to credit our net assets without donor restrictions, because these restrictions, they've been released. It's now part of net assets without donor restrictions. And you can see this on our, and we can see this in our statement of activities. We have a debit balance, because remember, these balances in the statement of activities in the revenue section, their natural state is to be a credit. So this negative 6,500 is a debit balance, and then we've got the corresponding credit balance in without donor restrictions. So in summary, it's important to track the various classes of net assets. And it's really important to kind of be familiar with how this works, because it's one of the most misunderstood things I have seen as an auditor. It's one of the things that people often have a very difficult time understanding, and that I've probably made a lot of entries for. Both contributions and net assets tend to have a significant amount of entries. So net assets stem really from the types of contributions that a nonprofit receives. And remember that net assets are not assets, but represent what you might consider to be various functions, programs, or projects. And so far, we have covered net assets with donor restrictions that are temporary. But another important aspect, as I mentioned earlier, are donor restrictions that are permanent or perpetual restrictions. So we're going to look at this in the next video along with board designated restrictions. So have a wonderful day, and if you need any accounting services for your nonprofit, feel free to reach out to me. My website link is down below, silverspringaccounting.com. Take care.